What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over Solana as it is now at risk of seeing a fall of possibly up to 35% unless we are capable of seeing a few things happen, all of which we will cover today. Now, I know I'm not behind the camera today, and that is because I'm out in Atlanta for my sister's graduation, but I will be back tomorrow evening, so do expect me back behind the camera then. But with that being said, of course, let's go on. Now, of course, do pay attention to Bitcoin more than anything at this given point, especially with the FOMC meeting coming up today. You guys know that I am a very strong believer that Bitcoin is driving the rest of the market, but at the end of the day, it is always important to focus on your individual altcoins so you understand their price movement going forward. And so for that reason, today's video, we are focusing on Solana. Now, let me go ahead and just first start off with the reason why I do believe that we are at risk of seeing a crash of 30 to 35%. Now, the main reason being simply due to the fact that we are stuck in this descending channel and do seem to be on track to revisit that bottom side very soon. Now, as we can see, we have clearly shown the respect of the support and resistance lines. We had a 1, we had 2, 3, and 4 point touches here on the resistance, and we had 1, 2, 3 touches on the bottom side of support, both of which are enough to say that we have a trend line and a trend line that is being respected. Now, for that reason, what we know is that as we do establish key points of resistance and key points of support, that they act like magnets. And whenever you're in a channel, they will kind of magnetize the price to them once momentum starts to go in that direction, in which if we're going in a downward direction, that's kind of like the magnet. And it's like pulling the price towards it. And whenever we're going to the upside here, we'll start to revisit it. And once you hit that magnet, it does get hard to flip that magnet the other way, right? And so for that reason, what we need to be paying attention to is the fact that at this point, we are losing key support levels. And if we lose one more realistically, we are in a position in which we very possibly could see that pull back towards $58, which at this point is a crash all the way down about 30 to 35%. So what we need to pay attention to are a few things. Let's talk about the dailies. Let's see what we're looking at on indicators and how this translates to what we need to see from the actual price itself. Well, looking at the price itself, what I will go ahead and say is that we did just lose a very, very important key level of support that now puts us in a pretty weird situation. If I draw a macro Fibonacci from the low in which we put in all the way up to the high up here, one thing you can see is that we lost this key support level of the 618 to 786 box. Now, historically for Solana, this will be the zone that will bounce us off, and then we will continue to the top side. But if we lose it, there's a very strong chance we come to revisit the lows in which created the macro Fibonacci. Now, what you can see is that we have lost the zone, and not only that, but we are now starting to see a bit of rejection at the zone as we have tried to re-enter it and are failing to up until this point. So while we are still being rejected by this zone, we are in a very, very, very strong situation in which we could get pushed and rejected to not only just this range low, but very likely to set the lower low on the macro scale, which does look like us pushing to $65 to $60, which in my opinion, very, very, I think it very possibly could happen. Okay. So what I'm paying attention to right now is how do we interact in this final backtesting of this resistance and going into, the next couple of days here. Considering the fact that we do have that FOMC meeting, I am expecting a lot of volatility, and I am expecting a lot of volatility that's not very technical. So I'm not going to talk about too much of what the indicators are saying, but more focused on the structural formation and the structural technical analysis of this thing, because I think that's the main indicator right now due to the fact that we can't expect volatility of unforeseen events. So looking at it, what I would just go ahead and say is that, of course, this level at $77 is our last point of support. If we continue to be rejected at this point and do continue down towards 77, look for that point to hold. Now, we have seen that has been a strong point of liquidity for the bulls. That is where many of them are buying. And so we can expect that they will step in at that level again. But realistically, I think that there is a very strong chance that if we are unable to do so, and if we do lose $77, that we will revisit back towards the bottom side for $67 to even $57. So the only way at this point really to stop at 30 to to 35% crash is for us to find support either at 77 or successfully reclaim this zone within the next day or two, and then use that to break out of this descending channel. I think those are the only two ways in which we will be able to avoid a 30 to 35% correction, unless, you know, we just see something very magical happens where we get really close to it and we just absolutely take off, which does not usually happen. Okay, so what we need to be on the lookout for is, do we reclaim this area within the next couple of days? And if we are continuously rejected by it and pushed towards the downside, does $77 hold, allowing us to set in this double bottom on a macro scale, which then gets us back above the, you know, possibly back above this key level of resistance here? Then of course that's a whole new battle in itself. So overall, what I would go ahead and say is that right now is a time to be being cautious, but I wouldn't be too afraid. Now, the reason why I wouldn't be too afraid is that if we are going to see a correction down this low, I do believe the majority of our indicators would be so extremely oversold that it would be a great point of purchase. Looking at our daily RSI, one thing you can see is that we are at an extremely low point in which we are, you know, sub 40. You know, we're even at 38, 37 right now. And that if we were to see a correction that low, there is a very strong chance we would be so extended to the downside that we very likely would see a strong correction back towards the upside. Not only that though, if we go back out to the weeklies and we turn on our Bollinger Bands here, one thing you can see is that at that point, if we were to do so, there's a strong likelihood that we would start to see an interaction very near to the bottom side of our Bollinger Bands. And what we do know is that more often than not, once we do see a revisit to the bottom side of our Bollinger Bands here, we will almost always resort back to that 20-week simple moving average, which at that point would be so far away from us, right? If we extended all the way down to this point and say our Bollinger Bands start to continuously work their way up as we do get a little bit less volatile here, there is a strong chance that we would see a resortment back towards this 20 SMA, which could be a strong pump. I mean, we could see another pump back up again about 70 to 60% as we would start to try to reclaim some of those higher levels. So for that reason, I'm not really all too worried about if we do see a correction towards the bottom side here. I do believe that we would start to see the corrective move towards the top side, and eventually I am under the belief that we will break towards the top side of this descending wedge, because more often than not we do, right? More often than not, whenever we go into this descending wedge off of a major uptrend, I'm trying to delete this, there we go, off of a major uptrend here, boom, more often than not we will get that breakout towards the top side, some type of consolidation or pullback of this nature before eventually seeing some type of growth. And we have seen that continuously from Solana, of course, as we did see back here, and of course as we did see back here. So for all those reasons, I do believe that this is going to play out in a similar fashion. It's just about how far do we go down before that does happen, and right now we are seeing the possibility of us going down another 35% before making another attempt towards the top side. So very subtly and very easily, the biggest things that we need to focus on at this point are, do we reclaim our 618 to 786 zone that kind of gets us out of trouble for now? If we're unable to do so, look for $77 to hold. At that point, we would be looking for the double bottom and the clearing of this key point of resistance to get us out of trouble. If both of those things fail, there is a very strong likelihood of us pushing down towards this zone of up to, maybe even 22% at this point, which looks like us just revisiting 68. But I think there's an even stronger chance we do come back down towards $58 to $59 to test the bottom side here, which is also our zone of confluence from these previous resistance and support establishments, from last year. So overall, that's what I'm paying attention to, and that's what I'm watching out for today. And I think it is extremely important to do so as well. Remember, I'm not a financial advisor, but I am a guy who does understand these Solana charts very well, and I do understand Solana's chart patterns. And I think that both of these options have a very high probability of playing out. So it is important to pay attention to them. I know I'm here saying it could go up or it could go down, and my goal here is to not tell you what's going to happen, to prepare you for anything that happens. And of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.